So this video is about supply and demand. We have, of course, already spoken fairly in depth about supply and demand in the main course. So this video is really going to be showing you refining supply and demand. Now, refining supply and demand is actually the way that I get the high risk reward entries and the way that you're going to get high risk reward entries as well. This is the biggest factor, along with obviously knowing where to put your stop loss and so on, that actually brings the big risk reward. Okay, everything else is a method of finding setups, but this is how we get the best possible entries. So I'm going to show you this example on Euro USD where we can see the 30-minute time frame is coming out of some lows and actually beginning to make some bullish movements. So if we just mark on the structure, so following on from the previous video, every video, by the way, is going to roll over into the next. So structure, of course, shows us how to find the direction of the market. Supply and demand is then going to follow on from that, and so on and so on and so on. So as we can see, we have, of course, the high here, then we have the low point of the market in here, then we have a higher high, and then a higher low. So we can mark this region generally as a higher low. Then we have another higher high. So now what we can expect is the market's going to come down into the higher low and form a nice bullish buying point. Now, this is where the refining comes in, because if we're on the 30-minute time frame, we don't really have a supply zone. We don't really have a good demand zone to work with. So what we want to do at this point is drop to the low time frames and begin identifying some refined zones. So we can see from this one that we do indeed have a indecision candle, which obviously goes low. So we're going to mark that as a demand zone. So this is relatively refined, but what we can actually do is go lower. We can go to the 5-minute, the 3-minute, the 1-minute, and see what the market is providing us there. Now here we can see on the 3-minute time frame, a very, very nice refined demand zone. So what I'm going to do is get my parallel channel tool and just mark this demand zone on the chart. This indecision candle at the bottom of the move, which hasn't really been traded into yet. Now, a big key piece of information when it comes to supply and demand, when it comes to refining them, we always like to see the midpoint of the zones tapped for the best possible entries. So if we're going ahead and using a buy limit or a sell limit, or just waiting for a reversal, we generally want to see, and 9 times out of 10 we will see, the midpoint of the demand zone or supply zone retested before the market makes its move in a given direction. So this little tap in doesn't concern me too much. I'm waiting for a more significant tap in to this higher low demand zone before the market actually continues its movement. Okay, so here we can see then we do have a nice 3-minute refined demand zone. If I shoot it up to the higher time frames now, and we see what the market is going to get up to, we will see, hopefully, that we do get a very, very nice entry using this refined demand zone. So up here on the higher time frames, we have our zone marked out, our 3-minute demand zone. And what we can actually do is plot an order on and see how it works out. So if we plot our order on the top of the zone, considering it is such a refined small zone, with a stop loss just beneath the low, we can then target, say, previous highs, because we now know we have moved into an uptrend. So if we target the previous highs of the previous move of structure, we can actually then see if the market is tapped into our order and see if it works out. Now, as you can see, this is a significantly larger risk reward than you may be using. This is an 11.38R. So that means for every $1 you risk, you're making $11.38 in return, which is obviously considerably better than 1 to 3, 1 to 4, or even 1 to 5. So allowing the market to play out now, we will see that we do get a nice tap into the demand zone. Notice how we refined it to a 3-minute demand zone, which gave us a very pinpoint entry. And then the market took off and actually went and took out that target with precision. So as you can see, refining the demand zones that we spoke about earlier on in the course in the market flow section gives us very, very good results and allows us to trade with massive risk reward. So taking it back to the point I spoke about close to the start of the video, this is the one factor that brings you the great risk reward. So at this point, we do now have a new higher high, as we can indicate with a new bullish break of structure. So what we could do is shift our focus to this higher low. Okay, so we had this first retest. I'm just going to mark this out. And now we can focus on this structure point instead as the one that we want to buy from. So if we go to the lower time frames, let's go to the 10-minute time frame and mark out this demand zone here. We could even go lower if you want a really refined demand zone. They're all looking around the same, 5-minute, 10-minute, and so on. So we'll work with this zone for now. If we put our order on using the same methodology that we used last time, so an order at the top of the zone, stop loss under the low of the zone, this allows us to get in with an under a 6 pips stop loss. What we can then go and do is, for example, if we just wait for the high to form in this trending move, we can then target this high for this trade. So we know we're in an uptrend. We know we are very much likely to actually come and approach this high once again, most likely surpass it. For example's sake, we will go with this. As you can see, once again, it is pretty much exactly the same risk reward, 11.58R. So just real quick, I went and plotted this previous one on again so that we can track that and see what the percentage profits are like from these trades. If we go up to the higher time frames now and allow this market to play out, it may take some time to get to where we want it to get. But if we do trade into, and as you can see, we did trade into that level very precisely, we will get a nice entry, as you can see. So this trade was triggered by a big wick, and literally within 2 hours of taking it, under 2 hours of taking it, that's another 11.58R in the bag. So 2 trades here using refined demand zones and using the simple structure methods that we spoke about in the previous video, using the higher high and higher low formations. We can see that we got 11.3R out of the first one and 11.5R out of the second one. So if you risk 1% per trade, you would have had a total of 2% risk over the 2 positions, and you would have locked in yourself around 23% just from 1% risk per trade. One taken at the London session of the 27th of July, and the other one taken towards the end of the New York session on the 28th of July. So within 2 days, 23%, 25%, not bad work. So the key takeaways for this video is to use supply and demand in line with the market structure, and the main pointer is to refine those supply and demand zones. So you already know the concepts of supply and demand from the major course, but what you now know from this, and what we're going to elaborate on more so with the other aspect, is that you can refine supply and demand zones, and you can actually use 10-minute, 5-minute, 3-minute, or even 1-minute charts to find very precise demand zones and supply zones in line with the higher time frame trends. So if you're in an uptrend on the 30-minute time frame, on the hourly time frame, and you know you want to buy from a higher low, you can actually identify the demand zone and then scale in to identify a 10-minute, 5-minute, a 3-minute, or even a 1-minute demand zone down there to actually get a very, very pinpoint entry. So by refining your entries on the low time frames to then trade on the higher time frames, you get pinpoint entries with tiny stop loss orders that you can then take into large swing trades. This means even a move of 50 pips, 60 pips, or even sometimes 30 pips or 20 pips can be a 10R opportunity, bringing you 10 times your risk on a position, which obviously is a very, very favorable way to trade. So I hope you've enjoyed this video. I hope you've learned a thing or two. I would suggest now going and backtesting this refined zones. What you know with the structure and the zones, just refine that on your charts, backtest that on your charts, and try and give yourself an understanding of the refined supply and demand method. So in the next video, we're going to talk about inefficient pricing, efficient pricing, and imbalances. This is very important stuff before we then move on to the other aspects.